It is a seminar, and this is an interesting event because we were thinking about how do we include a kind of a roundtable format with also enough reach to get some of our students who are really interested in this topic and in digital assets. And I am welcoming you to our first Digital Assets and National Security Seminar, our first seminar of the year. My name is Chris Brummer. I'm the director of the Institute for International Economic Law. I want to thank my colleagues Zainab Ahmed for putting in a lot of time on this particular program. Also, our friends over at Coinbase, Teneo, and the like. Even small events, you know, it's big things come from small places. Well, in this particular instance, even these kinds of events require a lot of coordination, especially getting some of these global experts here today to talk with us and to talk to our community here. And welcome again this morning. I'm going to get things started. I will be running in and also out. I'm a member of the board over at Fannie Mae, and we have our quarterly board meetings, and issues like technology pop up all the time. So I will be skedaddling, but I will be introducing you to the MC of today's event, Dan Gorfine. Dan Gorfine is one of my dear friends. We actually wrote, I think, the first FinTech paper together now years ago when we embarked on a journey on financial technology. He's an adjunct professor here over at Georgetown Law. He is the former head of innovation over at the CFTC. I'm trying to think of all the different, he is now the founder of Gattaca Horizons, and do you juggle?
A little bit.
A little bit? All right. Okay.
My children.
With the children, exactly. So I'm going to have Dan come to the stage before we talk to introduce our keynote, who needs no introduction.
Yeah.
But Dan.
Great, thanks.
Oh, okay.
Yeah, we'll both join in. Thanks, Chris.
Let's see.
Long walk around.
Yeah. Great. All right. Thank you so much, Professor Brummer. So I'm Daniel Gorfine, thrilled to be with you here today, and I'm equally, or actually more excited to be able to introduce Senator Pat Toomey, who recently left the Senate last term after a distinguished career representing the Commonwealth of Pennsylvania, and I had to look it up to be sure. It is a Commonwealth.
Correct.
There's only 4 of those, I think, in the U.S.
Correct.
So prior to public service, Senator Toomey worked in the financial services industry, I believe specifically in derivatives, which is near and dear to my heart as a former CFTC regulator. He then served in the House of Representatives for 6 years, followed by 12 years in the Senate, where he ended his tenure as the ranking member for the Senate Banking Committee. Senator Toomey has always been widely respected as a thoughtful and deliberative thinker on complex issues. Upon leaving the Senate, Senator Toomey has been working as an advisor to a few companies and has joined some select boards. We have a lot to get into in a short period of time, but I have to ask you first, how's it been leaving Congress? When you see the headlines, do you miss it?
Yeah, it breaks my heart. No, look, it's been great. I have no regrets at all about my public service. I enjoyed it. It was fulfilling, challenging, wonderful experience. 6 years in the House, 12 in the Senate. But after 18 years in elected federal public office, I was ready to move on. So I have a great portfolio of things I'm doing now. It's fascinating. I feel like I'm able to get an up-close view into some of the most interesting things happening in our economy through some of the roles that I play. So it's all terrific.
All right, fantastic. Well, we have a broad and very important topic today. It's national security and digital assets. But I think we need to start with this topic of national security. Let's unpack it. What are the elements that factor into national security?
Yeah, so I think there's a lot of ways you could think about this, but one way that I find useful is to think about certain categories or sort of pillars. So the obvious and straightforward traditional element that we usually reflexively think of in national security is military capability, right? So that certainly is essential. You need to have the physical ability to defeat an enemy, and hopefully that means you've got the ability to deter attack, and that's an important element in a category unto itself. But all of these are very closely linked, and it's almost always the case that to have a strong, capable military, you need strong economic power. Because militaries are expensive, and you have to have the economic engine that can allow you to afford the investment that it takes. Another category that I think of, and this has always been a part of national security, but now much more than ever before in my view, and that's technology itself, right? So technology was always, right, from the time the first village figured out that if they build a castle and put a wall around it, they're safer than if they don't, and then someone else figured out that if they build a catapult, they can destroy the wall, right? It's always been about technology, but now technology drives the entire economy. It drives military capability. It's also a source of vulnerability, right? I mean, 50 years ago, there was no internet to hack into and disrupt. There was no way to disrupt the software that ran the power grid. There was no way to potentially disrupt our payment system, you know. So it is both the most important source of economic growth, military capability, but it's also a source of vulnerability. And then the last thing that I would suggest we think about is infrastructure in a very broad sense. So, you know, I grew up thinking about infrastructure in terms of physical infrastructure, right? Roads and bridges and airports and tunnels and all of those things are absolutely essential. But for us, for the United States, equally essential, in my mind, are the sort of soft forms of infrastructure. So, you know, the software that runs our electrical grid, the internet itself, our payment system. You know, we have very complex systems that move money around, and the United States dominates that, right? It's our banking system, it's our ACH transfers, it's wire transfers, it's the Fed wire, it's the Fed master accounts. It's all of those systems that are one of the contributing factors for the dollar being the leading reserve currency of the world, also the primary medium of international trade. These are huge advantages for the United States, and this infrastructure is a big part of what makes it possible to have this advantage. So I think when we think about national security, we ought to include that capability that we sometimes take for granted and is kind of invisible to a lot of people.
Okay, so you've identified, you know, 4 elements of national security, and I'm going to put military power kind of off to the side for a moment, but economic, technology, infrastructure, how do those elements link up to certain emerging technologies, to blockchains, to digital assets? Where do those link?
So a lot of ways, right? And they're all totally related to each other. But if you think about this, first of all, this technology, I think it is a fascinating technology with tremendous possibilities. And what I'm referring to is just the idea that for the first time ever, we have the ability to have a distributed consensus mechanism for validating things. Identity, provenance, ownership, things like that. The ability to move value over the internet as easily as we are accustomed to moving data and information. This is very, very new. I think this is has the potential, it's very likely to lead to transformative developments, which are hard to imagine. Like when I first learned about emails, it didn't occur to me that there would be an Amazon someday, right? I mean, it just it takes a little while to get there. But I think this could very well be transformative in what it does for the economy. In the here and now, there's a lot of people who are in this space, right? There's jobs, there's investment, there's activity that's important in and of itself. But I think what it leads to is fascinating, has enormous potential.
No, absolutely, and I think so. Let's drill down into this, because I think you're right that these also kind of wrap into each other in terms of a lot of it being infrastructure, and it's plumbing, it's systems, and you know, my understanding is you can effectively tokenize almost any type of asset or instrument. So let's talk about that in the context of infrastructure. You mentioned the role of the dollar and the role of U.S. payment systems. Do you see digital infrastructure impacting those systems?
So it's always seemed to me that one of the earlier and more likely cases of this digital technology disrupting the incumbent legacy systems is in the payment space. And it's because this inherent feature of being able to move value like almost instantly at a very low cost and without even having an intermediary, right? That's extremely disruptive. It's very interesting how some developments have been occurring, including very recent ones. For instance, PayPal has announced that it's going to issue its own stable coin, and it's going to be settling transactions in stable coins. Now, PayPal's a giant. They have over 400 million users. Visa just announced that it's expanding its use of stable coins for the settlement of international transactions. So, to your point about, is this going to have an effect on the existing infrastructure? Absolutely. Mm-hmm. I think I don't know where it ends. I don't know exactly how this all plays out. But obviously, some of the biggest players in the world of moving money are deciding that they're going to use this technology to do it. Intuitively, it makes sense, but they're actually already doing it. This is underway, and they're expanding this capability. So I think I'd like to also make another point, because I think it's really important. So my theory of why the US dollar is the world's leading reserve currency and preferred medium for exchange has several components. So a lot of it is we're the biggest economy. A lot of it is we have rule of law that people can rely on. We have a relatively stable currency compared to much of it. So we've got a lot of those features. But there's competition in this space, right? Everybody would love to have the US dominance diminished, because it then diminishes our potential power over the rest of the world, right? I mean, being the reserve currency, being the currency that is the dominant medium of exchange means, we can impose sanctions on people. We can decide their money doesn't work. And we do that sometimes, right? We've done it recently, obviously, most famously recently with Russia. So everybody would like to diminish our ability to have that kind of dominant power, and they try in different ways. One of the things that I think is essential for us to retain our position, our dominant position in this regard, is to make sure our currency is the most technologically sophisticated in the world. Why would you want to cede that capability to anyone else? Yeah, there are other reasons that we're the reserve currency, but there's no guarantee that we stay that way. And so from a national security, there's lots of other reasons, but from a national security point of view, I want our currency to be the most technologically sophisticated. And to me, it seems right now, stable coins are a way that provides that technological sophistication, gives our money abilities, capabilities that it doesn't have today. Other countries are onto this. You could do a CBDC. Some are taking that route. I kind of prefer the private sector approach, but reasonable people can differ about that, and maybe they happen together. But my point is, it is in our national security interest to have the most technologically sophisticated currency in the world. And I think that clearly includes the distributed ledger technology.
And I want to drill in on this rails conversation, because there's the dollar itself, and then there are these rails that it operates upon. And you're right that Western infrastructure has predominantly dominated things like SWIFT.
Yep.
And maybe it's worth spending a minute talking about SWIFT and the role of SWIFT in terms of effectuating sanctions policies and otherwise. And then other jurisdictions looking to build new rails as well in order to move currencies and avoid sanctions regimes.
Yeah, exactly. So SWIFT is an international system. It's actually a messaging system that communicates from a payer to a receiver or vice versa about a payment that is supposed to be made. It's not actually a payment system per se, but it's a messaging system that is almost universally used in a huge majority of international transactions. If you deny someone access to the SWIFT system, it is still theoretically possible to execute payments, but it becomes very cumbersome. You have to send an email, or you have to make a phone call, right? It's not the automated system that SWIFT is. And that's just one of the systems, right? The other thing that I kind of implied, but it's worth stating probably, is US dollar transactions end up ultimately going through US banks and ultimately ride on the rails that the Fed controls and American banks run. And that's a big source of, I mean, it's important for our economy. It's a big source of, it's a strength and it's also a vulnerability.
So, okay, so shifting to how do we foster this innovation then? How do we do this responsibly? And as part of that question, I also ask, what does the industry need to be doing better to make the case around this technology? It's been in development for a while. In the grand scheme of things, we're probably still early innings.
Right.
But what needs to be true from the industry as well?
So the broader question of like, what do we need to do to make sure that we're innovating and we're thriving in this space, which is really, really important. I think the single most important step would be legislation that defines a clear regulatory process that is reasonable, thoughtful, and designed to allow this space to thrive. So I introduced legislation that I thought would accomplish that, and we've got to get that through Congress. The issues are somewhat polarized, not entirely politically polarized. There's still a very real opportunity for this to be bipartisan, but I don't think there's any substitute for having regulatory certainty, right? I'm not a tech guy. I'm certainly not a developer, but I can't imagine going to bed every night worrying about whether the SEC is knocking on my door tomorrow morning because someone over there thinks that my project involves a security. But that's reality in America, and that's terrible. People should have complete clarity. They ought to know, right? I've always thought that the stable coin is a sort of discrete product, if you will, technology that you could peel off. It's simpler to understand, and there are analogous products. You know, Treasury money market account is in some ways similar. And so my hope has been that Congress could get something done there. So to your question about what should the industry do, I think the important thing is to persuade members of Congress that this is important, that this is constructive, that it will enhance national security if we have a thriving crypto distributed ledger technology being developed in the United States under US values with guardrails that protect consumers and protect our financial system. That is very, very good for the country. Also, as part of that pitch to members of Congress, could I stress, give people ideas about physical economy applications. Right now, there's too many members of Congress that think everything in crypto, that is simply the realm of speculative trading and illicit transactions. That's what happens there. And okay, it's a failure of imagination, but help them along, right? Give them, like, I think the PayPal and Visa example are very, very helpful because every member of Congress is familiar with those companies and they understand, well, if those guys are making huge investments and in fact, routinely now using this technology for their own purposes, there must be something there. But they need help, right? The education level, the familiarity of members of Congress in this space is still very, very low. Educating them is going to help improve the chances of getting the legislation that we need to create the regulatory certainty.
All right, well, I know you're trying to get away from Congress, but I'm going to bring you back to Congress for a second here. So, crystal ball time. Where are we with, there's market structure regulation that's been proposed, stablecoin legislation that's been proposed. You referenced some of that. How likely is it? I mean, are we going to see that this year, next year? What are the odds, and what would it look like?
I have such a foggy crystal ball, but so what do we know, right? The House Financial Services has reported out of committee successfully two well, it's more than two, but both a market structure bill and a stablecoin bill, and it was a bipartisan vote. I think it was every Republican and a significant handful of Democrats. And I think the opposition on the Democratic side is ultimately coming from the administration, mostly in the House. The ranking Democrat on the House Financial Services Committee is Maxine Waters. I don't think she's reflexively hostile to this space. I think she can get to a good place, but she's probably going to defer to the administration, which is not unusual given the political configuration right now. Whether or not the Republicans are able to work out a deal with Waters/administration, I know Patrick McHenry wants a vote And I think he's got a very good chance of getting a vote on the House floor. If he has the vote, I think it's going to pass, right, with the vast majority of Republicans and a significant minority of Democrats. And that's assuming the administration is not on board. There still will be some Democrats who will vote for it. And that'll be a very important step, right? I don't think there's a path in the Senate at this point. There are some of the most prominent Democrats in the space of financial services, sort of writ large. You know, Elizabeth Warren is reflexively very hostile to this space. She doesn't want a regulatory framework that will allow it to thrive. She'd rather ban it. Sherrod Brown's not far from that position.
There's a view that a legislative framework legitimizes
it legitimizes it, and it does in a way, right? So the question is whether you think that's a good thing or a bad thing. I think that's a very good thing. But so I don't see a path forward in the Senate, regardless of how the vote goes in the House. I really don't think so. But I do think it's possible to reach an agreement with the administration. I mean, if you think about the separation right now, I think, based on my conversations with the senior administration officials back just last year, I think one of the biggest differences that are keeping a deal from getting done is the extent to which there is a non-federal path for a stablecoin issuer, the extent to which there can be state regulation, an issuance by an issuer at the state level with state regulation. That is very problematic for the administration. They want the Fed to have very extensive control over all issuers. It's not impossible to bridge that divide. There are ways to do that. My own view, I've been sympathetic for allowing state issuers. I think there's a lot of good reasons for that. But you'd have federal standards over things like requiring 100% cash and cash equivalent backing and requiring disclosure and requiring audits. All of those things could be standard nationally, but you could leave it to state regulators to actually oversee it. By the way, this isn't some radical new thing. Insurance doesn't have a federal regulator, right? Our entire insurance industry is regulated at the state level, and that functions pretty well. Even our banking system, you can have a state charter bank. So that model, I think, makes perfect sense. If there has to be some kind of compromise that gives the Fed more oversight than I would necessarily advocate for, it's an area that I think you could work things out. So all I'm saying is, I don't think it's going to happen this Congress. I don't know how the presidential election turns out, right? But in the next Congress, I think it's quite possible to get something done. And I still think a stablecoin bill is probably the right place to start.
Well, I like ending on notes of optimism. Thank you so much for helping to set the stage for the day. I mean, we've covered national security considerations, the technology, the potential for regulation, and the responsibility of the industry as well. So please join me in thanking the Senator for your comments and for setting us up.
Thank you.
Great. Okay, and with that, let's jump into our first panel. So it is titled Digital Assets and National Economic Power, Truths, Myths, and Gray Areas. Our moderator is Professor Anup Milani. So the professor is here. Yes, excellent. So then I can cede the floor and hand it over to you and our first panel. And then I'll be back, so you guys are going to get tired of seeing me today. Go.
I'm supposed to do the introductions?
Go ahead. Thank you so much.
Sorry about that.
No worries. You guys should go ahead and take the stage. Okay. I think he's always getting Peter Kirsten's on. All right. Oh, great. Yeah.
Hello, Mr. Kirstens. Could we please get a microphone check from you?
Hi.
Hello. Does that work?
Just a moment.
two.
Can we please have another mic check?
Okay, this is a mic check. Can you hear me?
All right, I'm hearing you. It's just coming in kind of low. I'll see if we can do something on our end.
I do get feedback.
Just a moment there.
All right. Yes, please. It doesn't really matter. I'll sit right here, and then we'll have Peter over here, obviously.
Stephanie, why don't you sit in the middle? Yeah, that's perfect.
All right, well, let's begin our first panel session for today's seminar. I want to introduce our panelists. So on the screen is Peter Kirstens, counselor for the European Commission. Here we have Stephanie Murphy, a former U.S. representative, Faryar Shahzad, the chief policy officer at Coinbase, and Juan Zarate, the managing director of K2 Integrity, and formerly assistant secretary of treasury for terrorist financing and financial crimes. I am Anoop Malani. I'm a professor at the University of Chicago, and today's conversation is going to be about digital assets, or at least this panel's conversation is going to be about digital assets and national economic power. So let me see if I can get around and
Have to come
begin
on
the
there.
conversation. Take the longest route.
There you go.
Okay. So let me begin the conversation with Stephanie Murphy, Representative Murphy. Can you start a conversation off by giving us a grounding about, or a background on the traditional relationship between currency, technology, and economic power, based on your experience? And then a follow-up question immediately after is, how does that traditional approach contrast with the approach that we take to digital assets such as cryptocurrencies and tokens?
You know, I think it's fair to say that the United States economic power has been, both currency and technology has been a key part of why the United States has had such strength globally from an economic perspective. And it's because we are the global reserve. We're at the lowest level that we've ever been as far as that's concerned. It's about 59% of foreign reserves are in US dollar. But being the global reserve has enabled us to set the tone for borrowing costs, global interest rates, where the US dollar is a primary medium for trade and transactions, international transactions. And it's also allowed us to be able to apply sanctions. And we've seen that there's power in being able to do that. It enables us to implement our diplomatic aims, our national security aims, our economic aims. And I would say that the second piece of that is the technology. You know, the U.S. leads the world in technology, and it's because we have stimulated innovation and have created an environment where the U.S. leads. You know, we have the best engineers, we're leading in technology. And the tech kind of revolution was sort of led by the United States, and what it has enabled us to do is to push our values globally, because within our tech is embodied those values, and it's values around democratization and around free markets. And I think that's more important today than ever before, because we're seeing a competition between autocratic and command economies versus our approach, which is democratic and free market. And I think we have to continue to prevail in that competition. But that's the traditional look. And what worries me when we talk about digital currencies is that we're not taking that same leadership role that we have over the past few decades in in cultivating and promoting and creating an environment that would lead us to be the world leaders on this issue. And, you know, we still have an opportunity, I think, to change the mindset. But it's really critically important because right now there are other countries that are surpassing us. And if we want to retain our position globally from an economic perspective, but also from a national security and a diplomatic perspective, it's going to be critically important that we create some of the same conditions that we had over the last few decades for our technology to flourish and to lead the world.
Okay. So I want to ask a follow-up question, but to Peter. Hard to see your face from back here, Peter, but I'm going to pretend that you're right over here. Peter, you've heard from Stephanie about how the U.S. is approaching digital assets from an economic power perspective and an overall global leadership perspective. And to be clear, she's saying we really haven't taken a position. The EU recently signed into law its landmark Markets in Crypto Assets legislation or regulation. That tells me that maybe the EU is taking a different approach on this issue, and specifically perhaps a different approach than some actors in the United States in balancing technological leadership and economic power with respect to digital assets. Can you talk a little bit about the MiCA regulation, what its approach is, and how the EU is thinking about that balance?
Sure. I'm very sorry I can't with you in Washington there. But before I get to MiCA, I would like to say a few words about our perspective on economic security and economic power, because that was also very important the way MiCA was shaped. The European, or better, the EU debate on technology and economic power is increasingly cast in terms of strategic autonomy, economic security, monetary sovereignty. And that's very important because it's an important shift, because in the last decades, and even longer, the EU debate was very much one of globalization, of ever freer trade, and those were the buzzwords that drove the economic and political discourse. But we've changed, and the reasons why we have changed are at least fourfold. First, there was the financial crisis that highlighted the results of vulnerability resulting from ever-increasing interdependencies, the rapid contagion that takes place in an interconnected world where there are dependencies. Economic contamination spreads as quickly, if not more quickly, than a virus, a pandemic. Secondly, we've seen a much more assertive Asian, in particular the Chinese stance on the international and economic scene. And that combined with the fact that Chinese companies, technology companies, cannot be ignored by anyone. They are very powerful, very good. And the fact that Asia and China really have become the world's high-tech factory. The innovation may not necessarily come from there, but the production is coming from there, and from the resources. Thirdly, the factor in the change of position on this is the hegemony, at least in the EU, of US big companies across a range of product and service markets. And this combined with what I would call an unhelpful America First narrative that even took over the White House as well, and that was broadcast on US television 24/7, was all social media, wasn't really of a nature to put Europeans at ease. And then fourthly, of course, war of the EU and the fact that the stifling effects the Russian aggression have had on supply chains, in energy markets, and there are other factors, cybersecurity, climate, and so on. But all of these factors together have moved the attention on economic security and strategic autonomy and monetary sovereignty, and they've moved these to the center stage of the political discourse. And the MiCA regulation, our regulation of digital assets, very much reflects. This MiCA regulation isn't a regulation about digital assets, stable coins, and crypto asset service providers, but you have to look at its purpose. And its purpose is to onshore crypto activity in the European Union. And to push the EU as a hub for blockchain and digital asset development, because we believe that this technology is truly transformational and holds huge potential. And we did not want to end up in a place where we once again be dependent on other jurisdictions. So we've created a space for this technology to become homegrown and home developed in the EU. Currently, European investors are exposed to poorly regulated crypto markets in other jurisdictions. We want to make sure that European consumers and investors, if they wanted to engage in crypto markets, could do so with the security and the safety that European regulation offers. And it's really an enabling regulation that tries to promote this. Of course, there are rules of the road, there are safeguards, and I know that investors would like all of the safeguards we put in there, but it is definitely a lot better to have some rules of the road than to have no rules of the road. And indeed, as Tumi said, if you're in this space, the SEC may come and knock on your door at any moment and say you're actually breaching the law or actually take court. I think it's better to have rules of the road and a safe space. And another factor was that we want to make sure that the EU did not become reliant on US dollar-pegged stablecoins. Currently, the stablecoins in the market are mostly US-pegged, and this is really upset and concerned our legislator. They were very keen to make sure that US dollar-pegged stables would not become a dominant structure in the EU, so that the blockchain economy not become a dollar economy. And then finally, there were concerns about an opposition to Libra and DIA, be it backed by a basket of currencies, or be it backed by US dollar, really was as a direct threat to the monetary sovereignty of EU member states. And therefore, the declaration puts in place a number of elements to avoid that US dollar-denominated coins, or foreign currency-denominated coins, become the currency of choice in the digital assets economy, which we believe will become extremely important in the years to come. So thank you very much.
So thank you, Peter. I want to turn the next question over to Juan, and I want to specifically follow this thread that Peter has opened, which is the desire to onshore crypto in the EU as a counterbalance. But to get to that point, I want you to get to that thread, but in two steps. So the first one is, how do you view the relationship between technology, leadership, and national security? Now, you've thought about this a lot in your past government life. You've advised the president on national security threats. You've specifically actively been involved in addressing financial crimes and terrorism. So I think that it would be great to get your view on this. I want to know how what do you see as the trade-off between technology, leadership, and national security, and how you weigh that trade-off. And then the second, getting closer to Peter's point, should leaders be concerned about the U.S. position vis-a-vis other countries or communities, such as Europe, and what do you think are good next steps?
First of all, Anoop, thank you for having me. It's great to be here. I want to thank Chris Brummer and Georgetown for inviting me. I do want to say I had the honor and privilege of working at the White House next to Faryar, and I wore the tie to remind Faryar where he came from, by the way. So anyway. Now, it's a great question. I think we've been privileged in the United States, in part because we have been the font of innovation and technology, the information revolution. We haven't had to think as much about the convergence of technology and national security. And I think there's really three dimensions to this, because I think the answer is obvious. Of course, technology is essential to national security, and it's become even more so over the last few years a realization. But I think there are three dimensions to this. One, technology is driving further and further the nature of our economy, right? And the innovation that comes from various elements of technology, whether it's in the crypto, digital domain, or other forms of new technologies, that is just a bigger and bigger portion of our economy, how we are more productive, what new forms of business and parts of the economy are developed. So that's an essential part of how we think about the 21st century economy. Second, we're dealing now with a near-peer global competitor in China that has technology aspirations as a core function of its national security. And so this gets to the question of civil-military fusion in China, how it's using technology it's acquiring from abroad, all of the issues that we've been through in the chips war and Huawei that are representative of the challenges of dealing with a near-peer competitor, a major global economy, one that's entangled with ours, that has the desire to use technology for its own, not just economic purposes, but national security purposes. And of course, that redounds to how effective a military is, what we do with our intelligence services, how we're able to manage the financial integrity of the financial system with money laundering and sanctions controls, et cetera. So there's that dimension. And then finally, there's a question of how the technology is going to shape the systems of the future and the norms of the future. Stephanie was alluding to that. And I think that's critical when we're talking about crypto and payment systems. And as Senator Toomey referred to this, which is the payment systems is an essential part of how we think about American power and influence and the nature of the economy. And so as the payment system evolves, the United States has to be a part of that discussion. And I think one of the things, for those of us who've been in the crypto sort of discussion for a while, it's been a bit distressing, is the lack of what we think is strategic vision for how this technology is evolving. The very idea that you could put the genie back in the bottle and somehow you can ban the technology it borders on ridiculous, frankly. Not to mention what other countries are trying to do with the technology, what innovators and the sector is trying to do with the technology. So the question is, how do you harness this technology and how do you leverage it, from my perspective, for purposes of American interests and national security? And how do you take the risks that are attendant to the technology and the industry and turn that into benefits? The point made about dollar-backed stablecoins, which are the predominant, most stable, most interesting stablecoins in the market, that should play into the strengthening of the dollar. And we should be thinking about that as part of the strategy. How we think about how PayPal and Bank of New York and others are playing in the digital economy and playing with crypto and experimenting, that should play a part of the strategy moving forward. So all of this, in my mind, is part of a broader evolution where technology, the economy, the financial system are not just domains of innovation or competition, but even confrontation and conflict. And that's a lot of the work that I do, is looking at the broad national economic security landscape. And you cannot divorce this technology or the evolution that's happening in and through it from that broader competition. Part of this is China, but part of it is just the natural competition that's going to happen in a globalized context, even in the transatlantic context, right? The legislation here is an attempt to put Europe at the core of technological innovation, and the fact that the US hasn't come to a consensus as to what our view is, what the regulatory framework should be, how we're going to incentivize the industry here, that is a deficit. That's a deficit not just for the technology or the economy, but also for our national security.
Okay, so I want to get into details, but we don't, of specifically how, if we were to form a regulatory regime, how it would compare to MiCA and how we would address that and how quickly we have to do that. But before we get to that, or maybe I should actually just turn that question over to you, Faryar, but I want to ask a slightly broader question, in similar vein as other questions. So you're heavily involved in debates about helping policymakers understand the relevance of digital assets to national economic power, the broad question that we've had now. I want to, before we get into the details of what a regulatory structure should look like, I want to ask you, how do you explain to policymakers the connection between digital assets and national economic power so that they can understand the importance of this question and acting on it within the United States?
Yeah, I mean, it's a good question. In a way, well, in significant parts, Senator Toomey, Stephanie, Juan, and even Peter, I think to a significant extent answered that question. One way I talk about crypto or digital asset innovation is that it's an iteration of the development of the internet. You know, the way we often talk about it is that the first stage of the internet was a medium under that you could access and read content, but posting content or transferring information was quite difficult. The development of what has come to be known as Web 2, or the second stage of the internet, was one in which you could not only read content, but post content. So all the things that we now do on the internet and all the kind of the explosion of innovation that occurs on the internet is the product of that big evolutionary step from the first iteration of the internet to the second iteration. What you haven't been able to do in the second iteration of the internet is, although you could post content and read content, you couldn't transmit value. And so your ownership interest in whatever, whether it's money or an affinity coin or a airline mile or whatever it is, you could not transfer that on your own. And so the way our economy has developed is that you have the development of very large intermediaries that essentially handle that. They're there to tell everybody that Juan actually has the money he claims he has, and when he's trying to buy shoes on the internet, he's good for it, and that the merchant should go ahead and give him the shoes, and Juan's money will be forthcoming to the merchant. That sounds incredibly trivial, and it's hard for a lot of us in this room to get our minds around that because it happens so seamlessly in the United States that we kind of discount that as a thing. But what that's done is it's created the rise of gigantic intermediaries, gigantic financial intermediaries, and gigantic technology intermediaries. And they ultimately are the guardians or the decision makers, the arbiters of whether Juan is good for the money and actually can get the shoes that he wants to buy online. What crypto allows you to do is transfer value on your own. You have an open blockchain, open public ledger. You have a claim on it that anybody can look at and attest to, and you uniquely have the ability to take your ownership interest, whether it's land titling, or if we were in Colorado, hunting and fishing licenses, or if it's a stable coin, which represents a dollar, or if it's a Bitcoin, or whatever it is that we tokenize, and have the ability to move that without needing to go to any intermediary. So you could just move it easily. Now, the benefit of that is when you look at Capitol Hill, there's a huge amount of energy being spent on what do you do about big intermediaries. There are hearings occurring almost every month on what do you do about big banks, big tech, what do you do about the harvesting of all of our data. Every time we go on there and we do things that are important or trivial, somebody grabs our data, the cookies and all the information scraping that occurs on all of us is ultimately being monetized by somebody who's not us. And so that ability to control ownership, including ownership of your own data, of your own information, is a huge transformational change. And that is, I think, a thing that we haven't done a good enough job in telling policymakers. I think they look at crypto and they see it as a kind of a novelty, a kind of a get-rich-quick, token trading medium, and they misunderstand how profoundly important the innovation is to the future development of the economy. Now, they're two big institutions, because we say it in crypto and it lands sometimes and it doesn't, but what has happened recently, and Senator Toomey alluded to this, was that Visa, which is the most sophisticated payment processor planet has ever seen. They manage something like $11 trillion of transactions a year. Just 3 weeks ago announced, or 2 weeks ago announced, that they're now incorporating stablecoin-based settlement into their infrastructure, into their plumbing. And if you read the materials that they issue, which I actually encourage people to read, they said the current system works, but barely. It's cumbersome, expensive, fragile, and vulnerable. We need to update it. We think stablecoin and token-based settlement can be that answer. Now, Visa has every reason in the world to protect the legacy infrastructure because they sit on top of it, but they have gone in big, at least in terms of this really important test case that they've launched. The other thing, and I'll stop on this, is the Bank for International Settlement, which I think people know is the organizing body of the global central banks. They are notoriously, certain central banks are nervous about the rise of crypto and stablecoins because they worry about that, the disintermediation of the role of the central bank. They issued a really interesting research paper basically saying, almost at the same time as Visa put their paper out, saying much of the same thing. The current cross-border payment and settlement system is cumbersome, fragile, vulnerable, and doesn't work for most economies. We have to figure out a new way. Maybe we can think about a token-based central unit of account that we can then issue, and then central banks can use it to process cross-border payments. Now, they very affirmatively said that they don't want it to be private crypto. They want it to be this other thing, and who knows if we'll ever develop this other thing. But it's a really powerful thing, and it's one of the things we talked to kind of your question about to policymakers is there's a lot happening here, and people like the Bank for International Settlement and Visa are all over this. And it's something that we really need to pay attention. One last thing I'll say, if I could, is people misunderstand where China is on this. They banned crypto mining and they banned private crypto in China, but they banned it just in much of the same way that they banned our version of the internet. They've created a closed loop internet. They are all in and iterating their internet, their closed internet into this next generation. Yeah. Beijing announced a Web3 innovation hub. It's the 41st city, province, or municipality in China that has established a Web3 innovation hub so that they can become the world leaders in the development of the next stage of the internet. And they just recently put Hong Kong in a position of becoming the offshore center for traditional crypto. So there's a race on, and I think our job as policymakers, because not everyone is like Senator Toomey or Stephanie when she was in Congress, to help people understand what's happening and not let us fall behind.
Okay, so we're running a little bit short on time, so I want to ask a question of Stephanie and Peter, but then I want to get back to Juan and Faryar. Very quickly, Stephanie and Peter. So I'm gonna synthesize what Faryar said, at least two components of it. You seem to make 2 points, Faryar, about why it is that policymakers haven't quite gotten to a point, at least in the United States, of making a decision about legislation. One has to do with concerns about fraud and consumer interests and monopoly power. And second one, I read into your comment a little bit, and maybe a little bit of Juan's comment, that there's a kind of a lack of impetus. We're doing okay. We have a great, the kind of status quo before these new digital assets, before blockchain and crypto favored the United States. It's only the new threat that maybe led Europe to act, and then now we have to look at it and see if that changes U.S. behavior. So Stephanie and Peter. First, Peter, is that an accurate description of why you think the European Union acted first, this competition? Because ordinarily we think of the European Union as being perhaps more aggressive when it comes to protecting consumer interests. And the second is, Stephanie, do you think that MiCA is going to accelerate the pace of change in the United States?
Well, I'd say that when I listen to Peter, and I understand his justification around sovereignty and why the European Union is doing that, but if you hear an ally basically say they don't want US dollar denominated coins because they want their own sovereignty and they understand the power dynamics, then imagine that's an ally who said that. If that's what your friends are saying, what are your foes saying? And that should put a giant exclamation mark on the need for the United States to get ahead of this issue. Because if our friends are saying that, imagine what our enemies are saying, right? And we know that China has, moved forward with a sovereign digital currency. They are, and other countries are doing that. They're aggressively moving forward on this, and we just simply can't afford to be left behind.
So Peter,
well, for us, the motivation really was that economic power depends on economic independence, on autonomy. And look at the technology, for example, and Faryar alluded to this. The current technology works, but it works barely, and it really isn't fit for the next generation internet. We really are putting a lot of chips in distributed or on distributed ledger technology. But if it is to transform the economy, if it is to fulfill its transformational potential, societies will have to digitize many, many assets and record them, manage them, and transact them on distributed ledgers. Now, what you see now is stable coins and some cryptocurrencies, and the few billion that's in there is nothing what is possible. And people and companies will be able to digitize many, many assets and transact them without intermediaries if they wish. They could do it directly. And this is a very, very scary perspective for countries and for governments, because what this does is it creates economic freedom. If the assets are digitized and you hold them in self-custody, you're no longer reliant on an intermediary. You as an individual are also can escape the control of your government. You can do whatever you like, and your governments can't use the economic power of the economy to leverage that to wage war, economic war against others, or to impose their views on others, because the people are independent, that the people are independent. And I've been observing this debate for a long time, and a great source of hesitation between governments with governments to go full in on distributed ledger technology is that it creates autonomy and economic power for their own individuals, and it weakens actually their control over their intermediaries or their companies, their intermediaries, and their ability to use their economic power to enforce their will or to influence their will onto other countries. So I think that is very much a driver, but ultimately I do think that policymakers will respond in a democracy and in a country that's based on the rule of law on what the people want and what the people desire. And people want to use the technology to have their self-determination and their economic freedom. And I think that governments in countries in the US, but also in Europe, recognize this and want to empower people on this. But they are, of course, aware that by doing so, they are actually weakening their own economic toolbox.
Thank you. So Juan, I want to bring this back to you now. You've written about the use of financial power in the United States to tackle terrorism, but what Peter's talking about is creating a great deal of individual autonomy and lowering national power, including U.S. economic power. So can you talk a little bit about how the financial commercial systems, as they're developing, have become a domain of conflict and what the future of that looks like, if there is in fact a greater autonomy, as Peter talked about?
Yeah, and I think Peter put his finger on the most fundamental question here, right? You have a technology that is disruptive, disintermediating, and challenges not just the financial system and the payment system, but how we think about the regulation of it. And I think that's been in part the reaction you've seen from Capitol Hill and others, and also in the shadow of the 2008 financial crisis, and a little bit of complacency. You hear this from Fed officials talking about the digital dollar. Why do we need it, right? That sort of thing. So there's a bit of that. But in the context of crypto and digital assets, the challenge has been it's viewed purely, or has been viewed historically, through the risk lens, right? How does this technology allow terrorists, criminals, rogue states to have access to capital, to be able to move value across borders, to be able to hide their hand or hide attribution in ways that they wouldn't otherwise through the use of the formal financial system? I mean, those are the early days of the debate around money laundering, sanctions risks. And those are very real issues, right? How does crypto enable ransomware, and how does sanctions evasion play out, especially when you've got our enemies or financial rogues aligning to actually use these technologies to evade detection or restrictions. And so those are very real issues. On the other hand, the technology enables all sorts of other things. And I think a major deficit that we've seen is the lack of risk maturity in the space, to say not all crypto is the same, not all VASPs are the same, not all jurisdictions are the same. And how do we think about using the technology to actually advance those interests? So in the context of ransomware, how do we think more aggressively about our ability to claw back and to trace? In the context of sanctions evasion, how do we think more aggressively about how to enforce sanctions in different ways using different technologies? How do we use digital ID and new forms of technology to implement the travel rule so we know who the originator and beneficiary of a crypto exchange may be? And to Peter's point, I think the high end of the policy question is, what does the future of the financial system look like, especially when authoritarian state capitalist systems are trying to use the system in a closed way, as Faryar described, in a way to actually control data, control activity, as opposed to what the technology is inherently built for, which is to democratize and to disintermediate and to allow for more financial freedom and inclusion. And so that, I think, is a fundamental challenge, because you still are left with the risk of the North Koreas of the world and the terrorist groups or the organized criminal groups trying to misuse the technology, while also challenging systemically where the technology goes and how we think about its uses to actually advance our interests. And I think that's the grand policy conundrum, I think, and part of the challenge of risk maturation, which is we've got to get to a point where we understand there are risks, we're attacking those risks, but we're also using the technology to advance our interests, including to, in my mind, undermine the control of authoritarian states or terrorist groups like the Taliban running a country and economy in Afghanistan. We should be thinking about how to use crypto to undermine their control of the economy, to enable those that we want in those kinds of environments, Venezuela and others. So this is why I've been so much of an advocate for the technology, because we've got to deal with the risks, of course, but we also have to think about the advantages from a US national security perspective.
So we're already over time. Do you mind if I ask just one last question to Faryar to close the discussion? Okay, great. We've gotten indulgence, so this is wonderful. So Faryar, you've heard a lot of different thoughts, and I want you to tie it all together. At Coinbase, you're a private actor that is trying to navigate a number of different interests. And I want you to, especially in the United States, where there's no clear regulatory guidance or a line for you to walk, you have to decide to balance these to some extent on your own, at least in the company's behavior. So please tell us how, in light of the regulatory uncertainty, how you manage the concern that Juan talks about, misuse by rogue actors, perhaps by authoritarian states, concerns in Europe about making sure there's autonomy and some protection against being subject to US financial dominance. In the US, about the need to preserve both a stable system that has been functioning for a long time, but we could improve, and also stabilizing that into the future with new technologies, given your perhaps affinity to the values that we have here in the United States.
It's a big question, and I'll answer it quickly, in the sense of saying, in a way, our experience at Coinbase is probably the least informative with regard to how it is for most crypto innovators in the United States. We're a very large global company. We're the second largest exchange in the world. We've been around longer than most. And so the way we deal with all those things that you talk about is by just devoting resources to address them. We have lawyers who are hard at work through regulatory work and through litigation, trying to get clarity as best we can, whether we're bringing the cases against the regulators or defending the cases. And then on the policy side, my team and I do huge amounts of work to try to talk to policymakers around the world to help them see a path towards coming up with the right regulations to provide the industry with the clarity it needs. And then we have a business that's built on the dynamism of the technology. And so we have an exchange, but we have a big investment in developing applications and use cases that we think are going to be a part of the future of the digital world and a tokenized world. So we're doing all of that.
The harder thing is for all the innovators out there who have come up with a really clever idea. They think they can solve a real world use case need, and worry, as Senator Toomey said, about getting a knock on the door from an agency with deep pockets and infinite capacity to destroy the ability of an under-resourced innovator to figure out where to land on this. We didn't do this on the internet, and it's unfortunate we're doing this on this iteration of the internet. And I think conversations like this are really helpful to get the debate out.
I agree. Thank you very much to all our panelists.
Excellent.
Nicely done.
Thank you very much. Yes, good to meet you.
I'm actually going to be at Chicago as a principal fellow.
Is that right?
Oh, fantastic. Hopefully we can get together and talk a little bit more. This is a great beginning to a discussion.
I'd love to do
Anoop, really nice meeting you.
Good
Thank
to meet you.
Stephanie,
Yes,
nice meeting you.
Thanks.
Thank you. Likewise.
Sorry for
Thanks
having
all
run a
your
little
work.
over trying to.
Where are you now,
flow.
Stephanie?
Good that we had a little bit of a coffee cushion.
Good. Thank you. Well, it's nice meeting you.
Okay, hello. I'm going to try to raise a loud voice here. If I can get everyone to return to seats. There's a lot of conversation taking place. All right, folks, can I have everybody please return to seats so we can stay relatively true to our agenda? How am I doing? Am I loud enough? I need to be louder? Oh, wow. I've never been told that I'm not loud enough, but I can keep getting a bit louder. All right, folks, can I have everybody please return to seats so we can get started with our next segment? Am I loud enough, Sam? Pretty good? Is there something I should say that's, oh, look at that. Something worked. I don't know what it was. It's contagious. Everyone's kind of quieted down all at once. All right, excellent. Well, I do want to keep us, on track with our agenda here. So Professor Brummer said that he's going to be dropping in and out today, and he's serious. He's everywhere. He can be in two places at once. He can speak to us from above, which is what's about to happen. We're going to hear a conversation that Professor Brummer had with Colonel Sarah Dudley, U.S. Army Special Operations Command Comptroller. And I think to do that, we're going to present it virtually. So if we're all set with that, I will give you the Colonel and Professor Brummer on screen. All right. Oh, is there a button I'm supposed to push?
No, I've got it.
You're going to
No
push
worries.
the button. Thanks.
Oops. That was the wrong button.
I want to once again thank everybody for attending. Attending this conference, our national security. I want to once again thank everybody for attending this conference, our national security seminar on digital assets. As part of our conversation today, even though I had to step out the room briefly, I wanted to share a conversation that I had with Colonel Sarah Dudley on digital assets and national security and the role of digital assets in very surprising ways by our government. Our government is a very large entity and with lots of different perspectives and frankly, lots of different purposes. And I think our audience will find this particularly interesting and suitable for that conversation as to the risks and the rewards and the trade-offs and the advantages and the disadvantages to crypto assets, and there's even a little bit of AI towards the end. Obviously, these thoughts and these conversations are her own and not those specifically of the Department of Defense, the Special Operations Command, or the U.S. Army. So sit back and enjoy this very brief conversation, and I really do hope that it adds to the larger conversation today. I am delighted to have with me Colonel Sarah Dudley here from our nation's capital. Colonel Dudley, I see that you are in your car. Maybe you can explain to us and to the audience why you are in your car.
All right, so I'm in my car because I definitely didn't want to miss out on this opportunity to speak to you today. And I am unable to use my military account to get through to your podcast. And so I've been relegated to my car in the parking lot outside of the JFK Special Warfare Center and School down at Fort Liberty, North Carolina.
All right. Well. Thank you nonetheless for joining us, and for all the students as well who are watching. I know that they are extremely pleased to have you. So certainly. The topic that we're going to talk about is going to be on artificial intelligence and crypto and national security. When you think about, in particular, I guess we'll start with the older topic of crypto first, and then maybe moving into the artificial intelligence question. I mean, what for you are some of the national security questions? I mean, here both on this program, but also for the students and others watching this interview, there's a larger conversation about the place of the United States and the international economy, technology, how competitive are we, but also what are the risks? I mean, like from the standpoint of our military, I mean, how do you sort of judge those apples and oranges?
right? So I would say I'll lead off with, why are you talking to an Army finance officer, right? So I would say that because the Army is in its development of modernization and trying to keep pace with the technological advances around the world, I'm a finance officer, and so we primarily deal with the trifecta of resourcing, which is people, money, and things. And so the money side, the Army expends a lot of money just in its day-to-day business. And so obviously there's a demand for us to keep pace with the evolution of financing and value transfer systems around the world, because as a ground owning force, we need to be able to react and interact with populations anywhere around the world, as well as our partner nations, in the way that they would like to convert and or transmit finances, money or value amongst the world. So I have been involved with trying to keep us up to date on digital assets as a broader category, cryptocurrencies in particular, because obviously in national security, not only do we want to be able to transmit our funding in the most secure way possible to try to avoid funding the enemy, but we also help to contribute to the broader U.S. government in being able to detect and figure out the way our adversaries are spending money, obviously in ways at which they try to work in gaps and seams between what is solid, regulated, and traditional. So very important for the military, very important for the Army. That's sort of your tee up.
That is so cool. Surprising answer a little bit, from this law professor's standpoint, like, oh wow, that's, but also very logical when you say it. When it comes to sort of financing our partners and making sure that they are adequately resourced for their objectives, does this mean thinking about how value is transferred? Does this mean exploring new ways in which value is transferred? So not just, I guess it makes sense. I guess you're not necessarily just writing a paper check and putting it in the mail and sending it into a war zone. Does this mean sort of exploration of other digital rails, including digital assets? Like, maybe you can elaborate.
Yeah, so absolutely. I mean, we want to, I think after 2 decades of the war on terror and seeing the ways at which elements that we partnered with had massive warp in their own underlying economic systems, the way that we were infusing US dollars into those areas, we want to cause the least harm possible. We want to transact in the way that they want to receive money and try to work within elements that they're comfortable with. So as opposed to enforcing or imploring them to utilize our currency, while it does have value above which their own currency or even digital assets might have in some cases, we want to have the option to be able to transmit to them in a way that they would like to receive support from the military that's in their footprint.
Really super interesting stuff. And I guess you're also, as you said, you're sort of getting information about, well, how adversaries may be doing that as well. And so maybe there's some learning by doing. I mean, maybe 1 or 2 insights that you can tell us without me having to worry about, later being assassinated.
Yeah, and so you just hit right on the money. Like, how can we help discern what's happening around us if we're not already in that environment, especially in all of the digital progression of cryptocurrency, stable coins, of NFTs, of the new and emerging CBDCs. How are, we do a lot of transfers with other governments. So we have to be in those environments to understand how to transact ourselves, but then also how to discern what's happening around us and or how our adversaries might be utilizing these for nefarious purposes against the national interests of the United States.
I'll do a quick turn to, I guess, the latest and greatest issue of AI and generative AI. I mean, from a financial standpoint, from a finance officer's standpoint, I mean, are there any green, yellow, or red flags that kind of pop up, or that you personally find kind of interesting when you think about these developments?
Yeah, so AI, I think, is spectacular in what it can offer. I think that it helps reduce the cognitive load on a human being for things that can be very well defined. AI can help with that in all sorts of ways outside of just finance, but other military purposes. But in terms of the challenges, is because it decreases cognitive load, it increases exponentially the time at which we have to react to be able to either counter or discern what is happening in a financial transaction. So when computers are trading rapidly and or financial payments are being approved in a way that is automatic, that significantly decreases the amount of time we have to, as a sensing system of having Army elements around the world on the ground, like to be able to tell our partners that we're working with what is happening, right? So AI just, unless we could develop counter systems at which can alert us immediately to what they think what is happening, it's really a game of seconds in terms of being able to react and counter threat finance things in those financial spaces.
I guess I'll end, since we are in sort of video land, particularly for some of the audience. When you look forward, and this idea of really being involved in these spaces in order to maintain our competitiveness and our national security, like, are there any sort of rules of thumb or ideas or experiences that you've found particularly valuable in terms of keeping ahead of the curve?
So I think it's like most other items with the Army trying to keep up with emerging technologies, and it's basically establishing those little nodes that are not bound by the traditional hierarchy and bureaucratic process that the military in particular is well known for. It's appreciated for in some things, but um, being able to have little nodes, and I think that's why I'm back at the Army Special Operations Command, where the Special Operations Forces are kind of those little generators of rapid fail, test, try for the big service so that we can figure out what's happening. But then ultimately, in this case, in the financial space, one, we want to do no harm with payments that are going out on our behalf of our government. But two, really making sure that we're still a valuable partner for our interagency organizations that really have the authorities to get into the space with near peers and peer adversaries, where the military is traditionally a kinetic option. That is not the space, the gray zone that we find ourselves in these days. And so we want to still be a very supporting partner to our other departments and agencies that are and do have authorities to be able to protect the United States in these venues.
Well, Colonel, we thank you for your service. This was also just a great and very interesting conversation, and we'll have to have you back to Georgetown as well to share your thoughts. Thanks so much for your time.
Absolutely.
success in industries as varied as 5G, semiconductors, and pharmaceuticals. It's $71 trillion in mobile payments, efforts to boost AI, and designation of Hong Kong as an offshore crypto center. In light of all of those factors, how should the United States respond? We've got 40 minutes, and I think we're going to have a very interesting conversation. I'm going to ask each of our panelists just to quickly introduce themselves, and I'd actually like to start with a lightning round. And so maybe each of you could take about 2 minutes, not only to tell us who you are, but based on your unique background and experiences, can you help set the scene by telling us why AI and digital assets are increasingly becoming arenas for geopolitical competition? Each of our panelists has a wonderfully alliterative name, and so I'm going to start with Tamika.
Great. I'm Tamika Tilleman. I work with Han Ventures on foreign policy issues. Great to be with all of you today. I have an unusual background for somebody who does venture capital. I started my career a few blocks away working for a little-known Delaware senator named Joe Biden and Tony Blinken on the staff of the Senate Foreign Relations Committee. I then went over and was Secretary Clinton's speechwriter at the State Department for a long time and worked with her and Secretary Kerry, eventually running an office that functioned a lot like the State Department's version of DARPA. And I got into these issues as a result of a conversation I had with the then president of Estonia, a country that had built out the world's best digital infrastructure. And I asked him, what would it take to port what you have created in Estonia to other jurisdictions around the world? And he said, well, if we were to build these systems again today, we would build on blockchain. And that sent me down a long journey focusing on these technologies. The answer to your question and why I think this is important has three parts, and I'm going to try to do them real quickly to stay under 2 minutes. I was in a conversation a few days ago with one of the country's leading geopolitical strategists, and he said the United States has a massive challenge right now because historically the primary source of our power has been the fact that other countries want the systems we build. And right now, nobody wants our systems. So that is problem number one. The second component of this, closely related to it, is that the reason they don't want our systems is that if you are a human on planet Earth right now who wants to use technology, you really have two choices. An authoritarian paradigm emanating from Beijing, where your private information is aggregated and used to power AI algorithms to manipulate your behavior for political purposes, or a big tech paradigm emanating from Washington, or sorry, not Washington, Silicon Valley and Seattle, where your private information is aggregated and used to power AI algorithms that manipulate your behavior for commercial purposes. And neither one of those is a very attractive system. And we have found through hard experience that neither one is particularly compatible with a healthy, thriving democracy. And so the reason that this really, really matters in my mind is that ultimately, if we are going to be able to build a system that harnesses the immense power and potential of generative AI and some of the other artificial intelligence tools that have emerged in recent years, we will need to couple that system with a type of accountability, individual ownership, and transparency that at this point can only be provided via blockchain technology and digital assets. We may find some better way of doing that. If we do, that's great. Let's use that new system. But for the moment, this is the best toolbox that we have on offer, and we should take full advantage of it.
Well, that was really interesting. I'm a little bit more optimistic about the state of U.S. technology. I think a lot of people want our technology. But Linda Laurie, I spent most of my career as a Department of Defense lawyer, spent 2 tours in the White House under Obama and Biden. Particularly of interest in this crowd, I was the general counsel for the Defense Innovation Unit, DIU, then on Silicon Valley. Then it was DIUX. I miss that X.
I do too.
I thought it was cool, but anyway. So I come through this really with tech competition with China. We are in there's a bipartisan consensus in Washington that really we have a tech competition that's existential and we have to win. This is autocracy versus democracy. This is, we're fighting against, or not quite fighting, but we're comparing ourselves against a country that's autocratic, that has MILSIF fusion, so that everything that comes on the civilian side is brought into the military, that is committing human rights violations against its Muslim population. Not a free society. It's aggressive both militarily in the South China Sea as well as economically in the Belt and Road Initiative. And so on all areas, this is a competition we have to win. On the digital assets side, the reason why this is so important is to the extent that China is the leader in this sector and takes away from the dollar as the preeminent reserve currency, we lose a major foreign policy tool, which is our sanctions program. Our sanctions program is built on the fact that nearly every transaction in the world has to go through the Federal Reserve, and therefore we can use that as an important tool in imposing sanctions. And without that, we lose an important foreign policy tool. And then finally, AI is really only one of the areas in tech competition. The White House just issued an executive order on outbound investment screening, where it's going to be both prohibiting and requiring notification of U.S. investments into AI, but also quantum and semiconductors. And if you're interested, you have 7 days to comment on that. But and we see as well from the perspective of export controls. There's a whole suite of policies, of regulations that that have been developed in order to ensure that we win this tech competition. And I'm looking forward to talking more about other ways we can do this.
Great, thank you. Great to be here. Thank you to fellow panelists and the organizers here. I'm Yaya Fanusi. I am the Director of Policy for AML and Cyber Risk, Anti-Money Laundering and Cyber Risk at the Crypto Council for Innovation. I'm also an adjunct senior fellow at the Center for New American Security. And I would say, actually, in terms of background, I worked in the intelligence community for several years back in the day. I actually left government in 2012. So sort of the old school, for me, sort of the old school national security days, right, where I never dealt with crypto or digital assets. But they say you can take the man out of the intelligence analysis, but you can't take the intelligence analysis out of the man. So a lot of the work that I've done in terms of research, think tank research, really focuses on what's next. What are the risks? What's developing? What are people maybe not thinking about, right? As an intel analyst, that's what you should be doing. You should be telling people about what maybe they're not paying attention to. And I guess my opening statement, I'll say maybe a statement which could be controversial in Washington, but I think it feeds into everything that has been said. In terms of what is missing and what is the US going to have to do, looking at these different systems, it's not even just the technology. The question is, do people want our system? And that's bigger than our technology. So I would actually say that there's going to be a need in the coming years for almost an articulation of a moral and ethical vision for the digital economy, for the digital future. I think that's where I would say there's a gap. And we're going to talk about China a little bit more, but what do you see in other countries, or in China? You see a very clear vision of the digital future. It's all laid out, and we'll go into some details about how do they see the future? How do they see how human beings should manage their activity, the role of government, the role of data? All of that stuff is spelled out in different documents, and we see the moves to sort of construct a digital economy that fits in with the CCP or the PRC's vision. We're going to have to figure out, well, what is our vision? What is the system? What are the ethics and morals around how you manage people's data? What autonomy do they have? That's the big question for us, and I look forward to getting into it.
It's going to be a great discussion. We've got Professor Yadav on remote. Yesha, do you want to go next?
Yes. Good morning, everyone. Good morning to you all. Thank you so very much to the one and only Professor Brummer for bringing us all together, to the organizers, Zainab, everyone else for making this incredible event happen. And of course, to our exceptional moderator, Sujit, otherwise known as Crypto's Jack Ryan. So this is really, I mean, we all know it's true. So it's really a pleasure to be here. Being on Zoom totally sucks. I hate it. Being sick also really sucks. So I apologize for the 2D action today. So my panelists made some incredibly insightful comments. I mean, I'm a person that's deeply invested in thinking about payment systems and ways in which these payment systems can be upgraded, particularly the U.S. payment system, reflecting some of the thoughts that Tamika was having earlier, trying to get nations around the world to opt into the systems that we're using. I definitely am of the opinion that AI, digital asset systems, blockchain-based value transfer mechanisms are going to be the next arena for geopolitical, economic, and monetary competition. Three big reasons for that, in my opinion. Firstly, they're already showing their uses, in particular for international value transfer. So when we're thinking about digital assets and tokenization in particular, we're seeing it become extraordinarily useful for making cross-border payments in a way that is cheaper, in a way that's faster than what the international banking system currently can promise. And that's happening even in the earlier stages of, say, stablecoin adoption, where these international value transfer mechanisms are becoming that much more compelling in their use case. Secondly, of course, is the issue of programmability, which is becoming and coming very much to the fore, that digital assets can embed smart programming in ways that money today just cannot and has not been able to. So for example, having a token that can control who uses it, how it's used, the ways in which that token might live and then die over a particular period of time. And so, these are things that mean that the issuer of tokens can acquire enormous power, reflecting some of Linda's comments on, the need for ensuring that we are at the forefront of having some of that power, that issuers of these tokens have enormous amounts of power. And so, that's another place where programmability means that, there's a lot of, there's not just power for the issuer, but also surveillance and monitoring for those who are able to track and these smarter digital assets. And finally, of course, is the fact of having a system where deep databases are going to be generated in real time. The more adoption you have, the greater programmability and surveillance capacity that can be generated as a result means that there are going to be huge databases of transactions, of people's spending habits, of the AI that can then be programmed using these enormous databases. And so whoever is able to get access to those databases, to be able to control those databases, to be able to set rules for how those databases should be overseen and regulated, really is going to have a huge leg up in this next iteration of the global economic order. And so I'm really thrilled to kind of talk about some of these issues as we go forward.
Well, what a tremendous sort of set of overview topics for us to discuss. I would like to pull a thread, Yaya, that you mentioned. You said that China has a clear vision of the digital future. Help us understand, what does that vision look like? How do digital assets fit into that vision? We all know that China is notoriously anti-crypto, and yet when it comes to the CBDC, the ECNY, probably the world's leader, even though it's still at an early stage of adoption. You've got the blockchain, the BSN, the Blockchain Services Network, which is the digital infrastructure they're trying to create to sort of support all this blockchain data. What does the Chinese vision look like? And help us understand why that may or may not be a threat to those of us here in the United States.
Yeah, may or may not be a threat, because those two projects that you mentioned, pilots, those two different efforts, the ECNY, the BSN, which I've looked a lot. I'm almost like a dog with a bone when it comes to talking about the BSN, which a lot of people say, oh, it's just one blockchain project. But I'll say all of these, or those two things, they may currently not be as significant, or maybe they're not very significant compared to, I think, the significance of what they signal, which is the strategic intent of China. And that is really its vision of a digital, I would say, digital intelligentization strategy. And this is a word, I'm not just making this up. Doing some research with my colleague at CNAS, Emily Jin, we looked at China's FinTech Development Plan, which is a document that comes out, I think it's every three years. And in that, it's talking about the importance of blockchain, of course, talks about other references data as a factor of production, which is something that she has talked about. Data is our current factor of production. And it talks about intelligentizing the economy. So making the economy, that means making the economy and its data ingestible, discernible to the government, to the state, so that the state can leverage it. And it's a very clear vision, everything that they're doing. So the steps of the BSN, which again, the BSN is just one blockchain project. China is investing in a lot of blockchain projects, but they're mostly domestic. The BSN is significant, even as a signal, because the BSN is really an attempt to create layer infrastructure, sort of cloud-based infrastructure to build on top of, and to shoot it out to the rest of the world. It's not just internally. So it's really interesting. And some of the sort of the founders of the BSN have actually said, and this is to refer, this hits on a point made earlier today with one of the panelists this morning about, someone saying, oh, well, usually China's not innovating, but then they're manufacturing. Well, there's been a shift where some are saying that no, they want to build, they see the mistake of decades past. They want to build the infrastructure that others would then build on, as opposed to just duplicating and creating the application. They want to build the base layer. So the BSN is an attempt at that. It's interesting to watch whether or not it's successful. And similarly with the ECNY, I love the professor's comments, because programmability is, it is probably the biggest thing we're going to have to grapple with, again, not just with crypto, but as we explore, as the world explores CBDCs, the idea of purpose-bound money, which can be very practical. You can reduce counterparty risk. You can do like escrow payments. You can do things for more efficiency. Wow, that just looks great. But then when you really look at it, and I think the professor is sort of indicating, it could also become very dystopian. And we can come up, if I mention all the things that you could think of, you'll think I'm a conspiracy theorist. But really, it's just, for programmability, the limits are really just the imagination of the developer, of the programmer. If you say, oh, I want people from this demographic, to maybe have limits on their transactions, maybe because they're not Chinese citizens, so they get tagged and they can only do X, Y, Z. And you could think of a whole bunch of other things. So that vision is one that is state controlled, I would say. And I don't want to keep going, so I'll pass the baton back.
No, it's very helpful. And Professor Yadav spoke about deep databases and programmability, the technological side of it. Yaya, you talk about the vision, the sort of 35,000 foot. So Mike, I wonder if you can tell us a little bit, given your expertise in international diplomacy at the State Department, as well as when you worked at the Senate, and now that you're in the private sector, can you help us understand concrete, tangible examples of the technological progress that China is making, either in the AI sector, in the digital asset sector, or perhaps in both?
Yeah, and I think it is important as we do that to kind of zoom back and understand the stakes and why this is going to matter. AI algorithms are ultimately powered by data. Unless you have a whole lot of data to feed into these systems, they ain't good for much. And it is almost guaranteed, for a variety of reasons, that the Chinese will have an absolute advantage when it comes to their ability to aggregate data to feed to these algorithms. They will have an absolute advantage on one hand because they have multiples of the number of people that we have, so they're just creating a lot more data. And they also have far fewer protections, as bad and as feeble as ours are, on data privacy. And so they will be in a better position to aggregate enormous amounts of information that will power their algorithms. We can still beat that. And the way we can still beat that is by unleashing the power of open source innovation. We can iterate much more quickly than they will be able to with centrally controlled systems. But the only way we will be able to take advantage and tap into the power of open source innovation is if we can come up with good models for incentivizing the best coders in the world to dedicate themselves to open source projects. And this is where I think there is a huge misunderstanding around the value proposition of digital assets. The most critical breakthrough, if you are looking at a naked national interest calculation, when it comes to the power of digital assets, is we have figured out how to get and incentivize the world's most brilliant coders to put their time and energy into open source innovation. That is a game changer. That is an absolutely critical shift in the way we think about technology innovation. But the only way we are going to be able to do that is if we have a good, dynamic, regulated ecosystem for digital assets in Western countries where we want this innovation to take place. The risk right now is that China, which again has an absolute advantage in data, has an absolute advantage in the exaflop scale computing that is going to be powering a lot of these systems at the moment. That's not necessarily going to continue forever, but at the moment they're in the lead on that front. That they will be able to use that information and the advantages that come with it to just outpace us when it comes to AI development. And if we want to beat them, we really need to get our house in order when it comes to defining and deploying a model for dynamic open source innovation. And at the moment, unfortunately, we are fumbling the ball pretty spectacularly in that regard.
So Linda, Tamika mentioned incentives, he talked about markets, he talked about the allocation of resources. Let's turn the discussion a little bit to the economics of all of this. Given your work with CFIUS and in US-China trade relations, can you speak a little bit about the economic implications of China's ambitions to export its technology extraterritorially and to make that technology indispensable around the world? And how does that vision comport with what we in the United States are doing now with export controls, with limitations on technology transfers? Help contextualize that for all of us, if you could.
Well, great. Well, thank you. So just to walk back, in case everyone's not familiar with CFIUS, is there anybody not familiar with CFIUS? Oh, everyone knows CFIUS.
They're shy.
Okay. So CFIUS is the Committee on Foreign Investment in the United States. And it's a committee of 9 government agencies led by the Treasury Department that reviews foreign investments into US businesses or also real estate. And it looks for risk to national security from each transaction. So I think we're not talking about CFIUS in this case, because CFIUS is just money. But there are situations in which there is a tech transfer, more of a sale of technology in order to evade CFIUS. CFIUS can be a very tough process. You want to buy into a US business, especially if you're from a country like China. It could be very challenging if the company you're buying has.
And I should say, Linda, when I say CFIUS, I mean CFIUS and reverse CFIUS. That is limitations on US investment abroad. So maybe if you could cover both.
Yep. So the reverse CFIUS, as people are calling it, the outbound investment security, which has this new acronym, brand new, hot off the presses of OIS. So OIS is looking to regulate US venture investments into Chinese critical tech companies. So currently those are, as I mentioned before, AI, semiconductors, and quantum. The idea being, why should American investors be helping scale Chinese startups that we could see potentially on the battlefield? So there's a general principle from this White House that we should be curtailing that investment. On the Chinese side, the Chinese ability to get its technology out, you think Huawei, you think ZTE. I think that actually is good economics for China, not necessarily for the host country, but also it's good for espionage. It's good for ability to disrupt systems, and so it's been widely understood as a tool of foreign policy of the Chinese government to really deploy these tech, employ tech out to especially developing countries, but beyond. And their Belt and Road Initiative is one of the means by which they are able to promote the deployment of technology, and also, frankly, debt, because these countries are buying on debt, and then they start owing to the CCP. So it's an economic tool, but also it's a foreign policy tool.
Yeah, Linda, you've talked a little bit about I guess, US regulatory structures. I'll turn it over to Professor Yadav. Yesha, you've written a great deal about international financial regulation. Obviously, China is a fintech giant and has increasingly made its influence known in international standard setting bodies, or candidly sometimes created its own as a counterweight. I'm curious, how does the rise of China in so many different yet interlinked technology areas, Linda referred to some of them, AI, semiconductors, quantum, how does that impact the global regulatory agenda? And I guess with particular emphasis on digital assets, particularly because that's an area where frankly the US has fallen behind. I'm curious, with your expertise in international financial regulation, how do you see these issues?
Pretty bleakly, actually, and not to be a super downer on this wonderful day, but the picture's not looking particularly rosy at present. And I think this recaps some of the comments that my co-panelists have been making. Firstly, I think it's worth just taking a step back and reminding ourselves what the US has done since 2008, which has really been the leader in global standard setting post-financial crisis. So following the collapse of the global financial markets, the Pittsburgh Declaration, the US working with the EU, for example, it's really been like at the forefront of setting the stage and the standards for how the major financial institutions and transactions ought to be regulated. And that's been super useful for a number of different reasons. One, it means that there's a level playing field for global capital. It means that there's not this kind of crazy race to the bottom where people can just start, taking risks, at much cheaper prices by moving to a different country. But equally, the most important thing here is the fact that it's US standards of a certain quality and robustness that are being exported abroad. Now, as Sujit mentioned, we're in a world where the US doesn't really have any standards for digital assets. Other regions, notably the EU with MiCA, have really taken the lead here. And China, obviously, it's kind of doing its own thing in many ways because it has been a global leader in payments. Yaya was sort of pointing to that. As well as in forwarding initiatives like the CBDC in China. So, this means that I think there's a real set of hurdles for global standard setting for 2-3 reasons. Firstly, first and foremost, China has a head start here in many respects. There are already major smart payment apps and payment apps, very smart AI-powered payment apps like Alipay, WePay. If you use Alipay, the kind of global payment app, there's so much AI that is driving that for the production of extremely fast microloans, for example. Just in terms of the products that you're advertised, there's a huge amount of data collection and AI powering that. In addition, there's obviously the ECNY, the Chinese digital yuan that is currently underway. This means that Chinese standards, Chinese technologies, their kind of power, those standards are the ones that arguably may be more ready to export in a variety of different contexts. And that's not a situation that many countries around the world are comfortable with. Linda kind of pointed that out earlier, that issues about differences in global perspectives on data privacy, security, governance. These divergences mean that people are just not comfortable having Chinese payment companies come into their home jurisdictions and collect that kind of data to use these kinds of apps across the board. In addition, we're at a place, coming to Tamika's earlier comments, that we're just really not that super sure ourselves as to how these, what the full power of these technologies in fact are. How is AI in payments going to work? What is the full potential here of the AI? How are the algos going to be? What kind of potential generative capacity might these algos bring to transactions? This is tech we haven't fully grappled with. So we are not sure what kind of standards and thinking we need to apply for that regulation. So we're behind the curve in that kind of thinking. And so even if we are not, producing the standards yet, we are still figuring out what our position should be just to try and understand what exactly it is that's happening. And so in a kind of, in a final bleak kind of commentary here, what this seems to suggest is that we are kind of in our own camps. And it's going to be much more strategically beneficial for countries, the US, China, and others, to retain their option value, to not join some kind of global standard setting order in this case, to be able to preserve the power of their national champions, of their local companies that are making these technologies and trying to propagate them abroad, to see, to seek out potential opportunities in different countries. And that means that the likely standard setting that we might see could be just very basic across the board, or it's just nothing at all, in a bid that it's our systems that get networked and used across the world, rather than necessarily the Chinese ones that already have this head start. So I don't see much of a immediate push for global standard setting, even though the right noises are being made by the G20, FSB, and others. It's just hard to see a future here in the near present.
Yeah, it's a really interesting idea. In an increasingly multipolar world, increasing optionality really does make rational sense for a lot of nations. And so it's a very interesting comment. Tamika, as we come up on our last 5 minutes here, I was wondering if you could come at this issue maybe from the standpoint of the private sector. Can you envision successful global standard setting taking place in the context of AI and crypto? Or are these areas, as Yesha was a little bit adverting to, are these areas just simply too hot and countries will not want to relinquish power in this area? What role can the private sector play in any standard setting initiatives? And I'll ask just one final sort of question here. You mentioned at the outset how maybe some of the traditional big tech players have lost a little bit of credibility in this sort of new era that we live in. Is there a way to make sure that sort of everyday regular folks are able to contribute to these standard setting discussions, which so long have been dominated by large entities, whether it's governments or corporations?
So all excellent questions. Let me try to tackle those in series. First, historically, the financial component of standard setting has been very slow, very cumbersome, and only moderately successful. The interesting dynamic we have when it comes to digital assets is that's not the only paradigm that we need to look at. On technology, we've actually seen a lot of very successful, pretty rapid efforts around standard setting, many of which have had pretty compelling results. And this is an unusual case in that we can go either avalanche left or avalanche right. There is the potential to emulate the more successful, more rapid dynamic models of tech-based standard setting, rather than sticking in the very slow, cumbersome financial standard setting that has a much less satisfying record. And I think it's important for us to understand the stakes. We have a couple of recent templates that we can look at here. If you take 5G, if you take chips, in both cases, you had technologies that were seen as kind of peripheral, not very fashionable, certainly something that most respectable policymakers didn't want to spend a lot of time on. And then very quickly, we saw a convergence of strategic factors that made those technologies vital to the future of our country and our allies. We are unfortunately running a very similar playbook right now when it comes to digital assets and the standards that will go with them. At the moment, most folks who are involved in policymaking want to keep all of this at arm's length. They think that it's not fashionable. They think that it's not important. We're going to rapidly end up in a place where this is going to be crucial, and the implications and the consequences of that are going to depend on how quickly we come to this realization. Ultimately, I'm a big believer in Winston Churchill's long studied quote that the United States always does the right thing after exhausting all of the available alternatives. And that's probably where we're going to end up on this front. But the more quickly we can get to that stage of doing the right thing, the better for everybody in this room.
That's great. Well, I think we're probably coming up on our last minute. So I'm going to ask each of our panelists to maybe offer brief final parting thoughts. Why don't we start with the video? Yesha, what are your closing thoughts?
A lot of pressure, so very Jack Ryan of you, I have to say. I think that the closing thoughts are that we have to we have to get started, right? Like we've heard in this conference from a number of different stakeholders, from government to, from the military to private sector to, just from the standpoint of regulators. So we need to come together at this point, start pooling our intelligence. We have an incredibly expert set of public actors here that can come up with incredible standards and solutions to do what Tamika was talking about, which is guide the private sector in thinking through some of these, different technological innovations that can happen. So that process has to get started. I think the political games playing, that has to, give way to this larger strategic objective that we are in a global race at present, and it does not look, for the first time, maybe in a very long time, that we're anywhere close to the head of it. So that's a problem.
Sobering thoughts, Yaya?
The topic has come up a few times about the race. Are we in a race? How do we get in a race? And I would say we need to have that urgency of a race, but with the same understanding that maybe it's not a race. I think we're in a moment which is similar to the spirit of 1776 to 1787. It wasn't that we were in a race with Great Britain and to duplicate what Great Britain did, right? I'm not saying Great Britain is the same as China. I'm just trying to make a historical reference in the sense that there was an idea based on history, based on an understanding of what governments do. The Fourth Amendment was created with a certain vision and a certain understanding. And I think we have to sort of take that approach. We need to figure out what does the Fourth Amendment look like in a totally digitized world.
Wow. Food for thought. So I think we are in a race, going back to that. And China's the big player, obviously, but not the only player. We have Iran and North Korea and Russia who are sort of in this crypto space. But if China's the 800-pound gorilla, then all the rest of us are 900 pounds. And I think we need to work more with our allies and partners in both in this space and in other tech areas. And we are with AUKUS and with the Quad and G7. But the more we can figure out these tough questions together, the better we are in maintaining a free and democratic world.
I'm going to misquote my old friend, late friend Madeleine Albright, who used to say that we're living in a world with institutions that were designed in the 18th century or 19th century with technology from the 20th century, and they're trying to solve 21st century problems. And that's just not working so well. And we need to recognize that dynamic, and then we need to do everything we can to overcome it. If we are successful, we're going to be able to unlock opportunity and prosperity, the likes of which the world has never seen. If we are not successful, we will end up in a dystopian hellscape, and I don't say that mildly. So the stakes are very high. The institutions that we have were designed at a moment when every problem worth solving could only be solved by governments. We are now at a moment when every problem worth solving must include the participation of many different stakeholders, including everyone in this room. So hopefully we'll all be able to help in that process.
What a wonderful way to conclude. Thank you, each of you, for joining us for this panel. And I think it's time for a break. Appreciate the work of the panelists. Thank you very much.
Thank you. All right.
Everybody else, you really have to use the right term, row, coffee, get coffee. We try to save your seats. We're going to roll into our final panel, and we save the best for last, of course. They can hear from the audience. Give us a minute or two.
2.
Or stand right, yeah. Okay, I told you all not to go far, so come back to your seats. Hopefully you got coffee. All right, can I get everybody's attention? We have our saving the best for last here. I'm waiting for that moment where all of a sudden it just
Always
hushes.
tell me that. All right. No
What's
pressure.
going to do it? There it goes. It's happening. Ah, fantastic. Okay, so I'm pleased to introduce our final panel of the day. This is Law, Technology, and Power, a conversation with global entrepreneurs. So to guide this discussion, we have Omid Malikan, who's going to moderate, and I will turn it over to you.
Thank you. Hi, everybody. Happy to be here. I am an adjunct professor at Columbia Business School, where I teach crypto. And I always like being in front of students, which many of you are, and I love talking to entrepreneurs. One of my favorite things about this industry is that there is literally nobody that can claim to have usually more than 10 years of experience, and if not sooner, and you meet a lot of interesting people leading interesting companies. So before we get into the topic at hand, I'm just going to ask each of our panelists to quickly introduce themselves. And since this is an entrepreneurial panel, tell us about your company, starting with Sam.
Sounds great. First of all, thank you so much for having us here. Really, really exciting talks throughout the day so far.
happy to give a bit of the engineer builder element of the room here. So my name is Sam, the co-founder and CEO at Guardrail.ai. We're a real-time security monitoring platform for blockchain teams. Whether you're launching a DeFi project, or whether you're launching something more custodial, regardless of the use case, we're able to solve some of the real-time security concerns that come up. Now, touching on my own background a little bit, always been really fascinated by security. I wrote my first research paper and presented it in a conference when I was 16 years old. Before this, I was at LinkedIn and was running the incident response team there, where I was a point of contact for 300 security incidents. I'm really excited to now focus my energy on the blockchain space, and we already have a live product. Happy to kind of talk to you guys more about that.
Sure. My name is Evan Coleman. I'm the CEO and founder of Cloudburst. This is actually my second venture. I was previously the founder of Flashpoint, which is a large cyber intelligence provider. Both of these companies I founded in my second bedroom in the West Village in New York City, where I am currently based out in Tribeca, actually. Cloudburst is essentially looking to gather intelligence from off-chain instead of on-chain. Every single Web3 company is focused on the blockchain, but the problem is the blockchain is the receipt. It tells you what already happened, right? We focus on gathering data from places like Telegram, Discord, places where illicit actors are gathering and discussing what they're doing so that we can intercept illicit actors and fraud campaigns and stuff in advance. And this sort of builds on my experience having worked with the Department of Justice, having worked with the FBI as a consultant on various different cyber investigations, terrorism investigations, and whatnot. So that's sort of my background. Yeah.
Daniel?
Awesome. Yeah, just want to reiterate, thank you for having me. Thank you for having us. Excited to be here. I'm Daniel Goldsmith. I'm the CEO and co-founder of a company called Heights Labs. We've essentially automated the chain of custody analysis at scale for public blockchains. And what that means is instead of just seeing on the ledger a pseudonymous account sent money to another pseudonymous account, what you really need to understand, because it's cheap or free or even incentivized to create new accounts on these chains, is where the money, where it originated, what the beneficial owner was many hops away, especially in the case of illicit activity where people are very excited and eager to create fake accounts to launder their funds, and where it wound up. Whether it was an exchange that's compliant or a VASP in general or some other endpoint. So automating that process, and today what is a highly manual process, is really what we've come to market with. Prior to this, I started my career as a mathematician, so a little bit different, focused on large-scale network analysis, and then spent some time leading R&D for one of the units at Chainalysis focused on chain of custody, and realized that there was a huge opportunity in the market to just fully automate that process and remove the need for manual investigations the way they're done today.
Great. I have a quick audience poll here, because I imagine a lot of you are relatively new to this topic. How many of you have heard of this idea of crypto being an enabler, or digital assets being an enabler of bad people doing bad things? Just raise your hand. Yeah, so everyone. Yeah. And this is interesting because your three companies are all building the tools that are designed to prevent this. But before we get to that, I want to test a theory of mine against you, because the reason why crypto gets that reputation in part is because it is a much more open financial system. I mean, like if we had to contrast it to the way the traditional financial system, which is banks and fintechs, works, is that we have closed systems where everybody is onboarded via some kind of a gatekeeper, like a bank or a fintech, but then there's no transparency. Like those of us who work at banks, like the banks don't know where the money is. So, God help the law enforcement official that has to go to that bank and ask them where the money is. When we move into this crypto domain, it's a completely different paradigm, because we have these open systems that anybody can use. And the users, as some of you already mentioned, are actually, they're pseudonymous. They're not anonymous, but we don't exactly know who's who. But we have total transparency of everything that's happening at any moment in time. So my personal belief, which I would be glad if one of you actually disagreed with it or not, is that the crypto model is actually better for preventing bad people from doing bad things. But I'm curious what you all think. So, Sam?
Yeah, happy to take a first stab at this. I think looking at crypto as its historical significance is really important, as you well pointed out. I think the first time that a lot of us first heard about this, especially in the security community, I was first exposed to crypto through ransomware payments. So that's kind of was the vehicle that a lot of the attacks were going towards in the early 2010s. Similar to that, I think some of the FBI takedowns that were happening in the crypto space is often how most of us first heard about it. Along the same lines, I think it's these technological shifts that have come in and created some more scope for developers to really experiment with it. So that's where I was kind of taking this question is more of course, I think there's a lot of primitives about blockchain that may make it more secure or less secure, but I see it as a giant experiment really to be able to understand really what could these systems look like. Of course, to be able to do this at scale in the real world, there's a ton of moving pieces, but blockchain gives a lot of developers and users the chance to kind of run these experiments to be able to understand what could liquid tokens look like, what could decentralized ownership look like. And I think with that in mind, of course, experimentation should always come with its own guardrails, its own safeguards, especially when they start growing and increasing more and more scope in society. So I think that's what we're seeing now. There's, of course, these foundational security layers that we've been hearing about this afternoon, whether it's large entities or these more of the regulation, which I think form kind of the crux of being able to support this innovation. But then there's also work that we're talking about here on this panel, which is giving the developers some of more controls to be able to move quickly and experiment, but still do it in a secure manner. So definitely, I think the platform enables it, but it needs a ton of work on top of it to be able to support it. And I think that's where we can kind of be part of the puzzle to be able to bring our value to it.
Thank you.
Yeah, I mean, look, I think it's a bit of a mixed bag. The truth is that basically every single form of illicit activity you can think of now in some way touches on crypto. Whether it's buying pink powder from people in the Ukraine, whether it's trading weapons, whether it's international terrorism, it's all cryptocurrency, and there's got to be a reason for that, right? They're not jumping towards that particular form of currency because it's the least secure. They're doing it because it's the most secure. And I think if you talk with government investigators and government agencies who are involved in tracking this, at least the ones I speak with, they would much prefer to do regular bank investigations or regular credit card investigations than having to pursue crypto trails. Now, there is an answer to this, which is that if there is there proper tooling to track these transactions, to track the actors, to intercept them before they do what they're doing. Yeah, in that case, but then it's like a regulated financial industry. And I think that's part of the problem is that a lot of the people in the Web3 industry don't seem to understand that in order for that industry to grow, right, to really properly grow, people need to have confidence in it, right? Ordinary consumers who would jump in and really provide most of the money for the industry, they have to feel confident about it, right? And right now, the kind of protections that exist in the regulated financial industry, like you go to a bank, like they check and make sure that your transactions are legitimate, right? If there's an illegitimate transaction, a credit card company will get your money back, right? Those things don't exist with crypto, right? Once your money is gone, it's very hard to get it back, right? So if there's tooling and protections that are put in place to guard against this, yeah, sure, I think there's a very bright future for crypto. But I think the Web3 community does need to get its head around the idea that the unregulated utopia that exists as well as like unregulated capitalism. That's not how it works. Capitalism might be the best system out there, but regulated capitalism with checks and balances. And that is what is missing from Web3 and crypto.
Any additional thoughts, Daniel?
Yeah, I think there's a distinction that should be made between the crypto rails, which are secure, are verifiable, are public, and people using them. And I think it's similar to the financial system that you can have a variety of good actors, bad actors. You could have people doing whatever they do, but some people are going to get scammed. Ransomware will exist because it's a cyber run. Everything is connected to cyber at this point. So it's really about understanding what are the benefits of this new financial building block and how do we leverage that. And I think people like us and people are in our industry and hopefully the policymakers can be very exciting. And then both leveraging what exists in finance and the web in terms of security and regulation and just understanding how to protect people in a healthy way that doesn't stifle innovation, combining that with this new financial building block can be very positive. And I don't really see them at odds with each other. It just has to be figured out.
So on that point, you guys are not just building businesses that are providing the tooling that I think will hopefully make my thesis come true eventually. But you're also entrepreneurs. And as entrepreneurs, you have to navigate both what is a new industry, where we've seen many boom and bust cycles, and it's not clear what the winning business models are and whatnot. But you also have to navigate an uncertain global regulatory landscape when it comes to this topic. And I think all of you alluded to in your responses that the industry initially had these utopian ideals of being completely based on code and self-regulating. And it's becoming more and more apparent that that just doesn't work, practically speaking. And Evan, you made a good point. That's not what the public would trust. So on this issue of regulation and compliance, which has come up throughout the day, I thought it was interesting that the Wall Street Journal had an article today where the headline is, "Crypto companies are looking outside the US for growth." And it cited specific businesses that say that it's just hard to do things in the United States right now because of the regulatory uncertainty that we have. I imagine you all run global operations. So I'd just love to hear, what's your perspective as a startup founder on the inside of this?
Yeah, happy to go first. Of course, guys can add on. So I'd say there's two different perspectives to this. One is somebody building security for this space. I just want to call out that the tides are turning. I think when we first started, it was all about open, permissionless, completely open systems to do any and all transactions. I do think that over the last 2 to 3 years, we've seen a lot of unwelcome actors come in, and that's really created a lot of heightened awareness for security. It makes our job a lot easier to be able to kind of go to folks who are building in this space and let them know that we're on their side to kind of build these guardrails and security around the whole space. So a few years ago, getting simple things like third-party audits and insurance were nice to have. So I think today they're becoming must-haves, and the whole space is really maturing in a really positive direction. So that's, I think, a really good tailwind for us. Meanwhile, I will say that as developers who are trying to innovate in our businesses, there's a ton of really exciting experimentation that isn't always accessible with the current regulation framework. And of course, the more patient entrepreneurs are definitely going to stick around and find the right ways to find that middle ground solution to build what they're building in a compliant regulatory manner. But at the same time, when regulation can be a little bit hard to find the middle ground in, there's a ton of really large businesses that are also looking at moving outside the North American startup ecosystem. And the interesting thing I was noticing there too is it's not purely just looking to move outside of the US or outside of North America, but it's also looking at how this can go directly in combination. Company regulation is one part of this, but there's also tax regulation, immigration regulation, that I'm seeing a lot of folks really kind of almost build an entire package or bundle in terms of moving their companies offshore. So definitely something that if we don't have the clarity to be able to advise the people that are experimenting and bringing in the cutting edge of innovation, North America will be losing.
So I think it's not just the lack of regulation, it's also sometimes the lack of clarity in terms of the judicial branch as well. You've had different rulings from the courts in terms of whether cryptocurrencies are commodities or whether they're securities. That has a huge impact in terms of how they are regulated, in terms of what the regulations are, in terms of how to hold them, et cetera, et cetera. If you look at the difference between, like, say, a cryptocurrency versus a stock right now, pumping and dumping a stock is not legal. But pumping and dumping a cryptocurrency here in the US right now is arguably legal. And there's like $120 billion being sucked out of the market every year just through pump and dump scams, right? So, that's an issue that might need to be resolved regulation. I think in terms of companies moving outside the US, I have seen some evidence of that, and there's a reason for that. If you look at Europe, for instance, Europe is putting forth a very specific piece of legislation called the Markets in Crypto Assets Bill, or whatever they call it. It's already passed the Council of Europe. It's known as MiCA, M-I-C-A. It's very, very detailed. It's very forthright. It addresses a lot of issues. One of the issues, interestingly, it addresses is the idea of people pumping or advertising cryptos on social media and then running away from them. So Kim Kardashian and Tom Brady, good luck to you, not doing that in Europe anymore. So I think, I think that is one reason. And you also look at like Switzerland, and now there's a Swiss crypto valley, right? So there are other areas outside the US that are kind of catering to these businesses and are trying to create a regulatory and judicial environment that is at least clearer to operate in. Although it's hard. I think also if you look at Binance, Binance keeps threatening to abandon the US, but they don't, right? So there must be a reason why they're staying here, right? So I think there does need to be a regulatory push from Congress, which is going to be interesting to see because we don't see anything like that right now. That's very clear and well laid out, and that's thoughtful, and maybe it's wishful thinking to expect that.
And is it fair to say that from your purview, one of the most important things as far as regulatory clarity is jurisdictional clarity? Which tokens and coins are categorized as what? And
yeah, look, I mean, it's a fundamental question. Are they securities or are they commodities, right? This is like a binary thing, right? It's either A or B, right?
Or neither.
Or, yeah, I guess so, that's true. Yeah. But I mean, it's that kind of a fundamental question not having been resolved or being batted back and forward and having this, I think this is the same district, having different rulings on different cryptos, like very confusing, right? And it does lead to a lot of uncertainty, and people are investing, millions, tens of millions of dollars. You don't want it to go down all the tubes overnight for nothing, something you had no control over. So yeah, sure.
Yeah, and just to address your question, I guess, as an entrepreneur and not someone necessarily thinking about these problems all the time. So as just someone minding my own business, a small business in the space, over the last couple of years, I mean, over this year alone, I mean, we've been operating for 3 years and change, and this was the first year that we've actually had issues relating to, like, we've had to set up multiple bank accounts because any of our on-chain accounts need to go through fintechs before they touch banks, because otherwise, new types of de-risking in the sense of, hey, we don't know what to do, so we're going to close your account. That has come back in through conversations we've had, so we know to watch out for those. Separate from our work in the space, trying to actually advise and give best practices, given our specific business model, we're a crypto service provider in addition to the work we do with government, and that alone was enough to make a lot of, even, we had to switch insurance policies, right? Like, because people are like, oh, crypto, that's not so cool anymore. And that was pretty surprising as just someone that provides a software solution that mentioned crypto in one of our many detailed reports that we had to submit.
I think this might be like one of the single most pertinent facts about how America has sort of lost its way here, that we have a startup that's designed to help clean up the space and is a contractor to the US government, but struggles to get a bank account in America because of specific impositions from banking regulators on about businesses that interact with crypto. So clearly, like, if nothing else, a bit more nuance about.
So wanted to make sure to mention that, for your consumption.
But it is interesting because you do interact in your professional role with people within the U.S. government, right? And my experience has always been actually that there are many who are deeply knowledgeable. They get the nuances. But I'm curious, like your and this is open for all of you, like the counterparts that you work in, whether it's law enforcement or the federal regulatory agencies or the state agencies, what is your experience with them like?
So I just want to be very clear, like we've had very positive experiences when we go to market and we say, hey, this is a solution we can offer. Did you know that there's now a way to do this in an automated way? And they go, oh, we really have no way of doing it other than what's public or buying expensive tools on the private market. Hey, yeah, we'd love to try this out. But, to your point on regulatory clarity, it's, we're talking about 2 or 3 degrees of removal before it interacts with us as entrepreneurs building, right? So I can go have a great conversation with someone in law enforcement or in a regulatory body or something like that. But if action isn't made, and then the people that they speak to, the people they regulate, the people they enforce, have something happen, and then their colleague at a different financial institution reads that in the news, entrepreneurs are still going to get the brunt of that because they don't have the resources to be like, oh, well, we're going to keep your business, we're going to de-risk these other people's, right? So it is this weird dichotomy given our particular business models. Maybe you guys are facing similar things, but it hasn't impacted us in a material way. It's just something that up until this year, I thought was in the past, and then it kind of reared its head again.
We have had relative levels of sophistication impact how we are able to deploy. So without getting into specifics, I think it's fair to say that across the US government, there are different levels of technical sophistication, both with crypto as well as just with automation generally. Like I was at a conference last year organized by Inquitel, and the whole theme of the conference, which was, a lot of people from the USIC were there. The whole theme of the conference is that we need to move away from UI UXs, we need to move away from manual searching, we need to move towards automation because that's the only way of being able to handle this stuff. And yet, only about half of the agencies that we deal with or we come across are really prepared to deal with automated data feed kind of solutions. A lot of the folks in agencies that you guys are talking about here right now are literally running searches by hand in kind of like a dumbed down like LexisNexis, like I'm doing like manual searches for this and that. I'm hoping to get results, and they don't really have very sophisticated tools, and they don't have the budgets to really push beyond that. So it's important to note that even among some of the key agencies that are gatekeepers in this conversation, many of them are still stuck like 20 years ago in terms of their level of technical sophistication.
For us, we've had pretty limited interaction with, I would say, public sector and government sector. So our experience, to take it with a grain of salt, but on the company building side, I will say, in light of some of the different kind of changing regulation, we've had to kind of, similar to David's experience here, pick extremely kind of conservative approaches, whether it's tokens, incentives within a product, or even kind of some of the more kind of interesting governance things. We've kind of been extremely cautious about not inviting any unnecessary kind of questions. So definitely something that takes up a lot of resources for an early stage startup, takes up a lot of bandwidth for teams that are actively trying to shape the security in the space, but at the same time kind of make sure there's no target on their back. So even as a service provider, we've kind of made some very concerted steps to be able to keep ourselves out of that conversation. With the customers we work with, mostly being private sector, they themselves have also kind of watching the regulation change in the decentralized finance space. And specifically for them, of course, there's some clarity around things like sanctions and sanctioned actors, but they come to us with the open questions of, given that there's these two extremes, how can Guardrail kind of fit into helping us solve it in a kind of middle ground solution? So we're pretty active in those conversations, but more in the private sector with our teams using us.
Let me throw a hypothetical out there, because we heard throughout the day that there is general optimism that eventually the regulatory clarity in the US will come, hopefully from Congress. We have an election next year, so we'll see what that changes things. Let's say hypothetically it doesn't for whatever reason. And the US just becomes this very difficult place to operate as an entrepreneur, or actually increasingly for those who don't know, as a user, that there are increasingly decentralized services that just do what they can to prevent Americans from using them. So you find yourself in funny situations where you go use something, and then it'll say something like, this service is not available in Venezuela, North Korea, Iran, and the United States. If you don't have regulatory clarity, right, you don't want to risk Uncle Sam coming after you, so it's understandable. But let's say the regulatory clarity in the US does not come. Does crypto still happen? Are digital assets still going to be a thing on the global stage?
I think it's been said today itself that the genie's out of the bottle, it's not going back in, and I think either the US gets to lead the innovation and kind of be part of that adoption curve, or it's going to be playing catch up with more conservative versions of its own applications of that technology.
I come from a kind of more traditional cyber intelligence background, and I can tell you most people in the general cyber intelligence world have just no faith in crypto, none, like zero. They only see it as a medium for like ransomware and criminals, right? and they're not interested in looking at it. They're not really interested in studying it that much. And the reason I started Cloudburst was because I disagree with that. I hate to use this phraseology because it sounds terrible, but at this point, my view is that crypto is too big to fail, right? There's too much money invested in it. It is too complex. It's just not going anywhere, right? You have even countries that are investing in their own like stable coins, right?
Sure.
So I don't see this as something that's going away. It may change the nature of what it's doing. Some coins may, go the way of the dodo bird, and some coins may emerge. But the bottom line is cryptocurrencies as a market, as a means of a currency, I don't think it's going anywhere. I think this is the future. And I think it's a mistake for the folks that are not paying attention to it right now, because it's like focusing on dot matrix printers when you have like laser printers that are lined up like this. It's like, this is, paper technology in terms of like money, like that's not, that's it. It's going away. Like,
yeah, just to echo both your points, I think that if no regulatory clarity comes through and the U.S. in some, bizarre world takes the extreme stance of, we're not going to allow any merge, I think it is a primary, it can move towards a primary means of exchange if the right measures are taken, especially in emerging markets. And what will probably end up happening is catch up. And I personally would really rather that not happen and there continue to be, a leading position. And I think, I think tokenized, I think in and of themselves, are a huge potential asset to the US. And I think a lot of those points were echoed in previous talks as well, in terms of, I was at a different conference yesterday and someone was showing a slide that just the amount of deposits and the demand for treasuries owned by stablecoins today are already like the 15th largest global economy or something like that. And that financial power, right, is denominated in dollars. So I don't see why that would be at odds with any of the other views of national power that, you would actually be worried about looking to regulate.
Yeah, and that's a very interesting example. So for those who don't know, stablecoin is just a terrible term for when you put existing currencies on this blockchain infrastructure, like the dollar, the euro. There's dozens of them out there, but one of the interesting consequences, which perhaps a lot of people didn't see coming, was that tokenized dollars are in some ways the killer app of crypto, particularly in emerging markets, highly inflationary countries where they already tried to get physical $20 bills if they can in places like Argentina or Iran. And so this is kind of like part of the odd situation that we have. There's about $150 billion of these things out there. And that's in a way impressive considering the lack of regulatory clarity. And the way these things works is somebody buys a bunch of treasuries and issues tokens against them. So it is a way to both expand the reach of our currency, which for geopolitical reasons is always desirable, and to fund our debt, which is large and growing. And so this was in some of the previous panels, was that there was hope that Congress would find clarity. So even then, I'm actually curious because, let's go back. I know I'm almost a single issue person on this, but this idea of bad people doing bad things, right? Part of what bothers me about that headline treatment of crypto is that people say it like that doesn't already happen in the existing banking system. And remarkably, there's like $2 to $4 trillion of money laundering that happens through the existing banking system, despite how much of a pain it is to open a bank account. Right? So let's say that some of that activity now moves on to these tokenized dollars that exist on the blockchain, and that adoption grows beyond just what's happening now, that maybe individuals start to use it, businesses adopt it for whatever their payment pain points are, right? From a compliance and security point of view, would that make the sort of the overall dollar system more secure or less secure? I'll open that up to anybody that agrees or preferably disagrees.
I guess it depends what North Korea does, right? Look, I just responding to something you just said, which is the idea that it's right now, in terms of the traditional financial industry, you're right. There's a lot of money laundering that goes on, right? There's a lot of terrorist financing, there's a lot of drug smuggling, there's a lot of all this stuff that goes on in the traditional financial market involving traditional bank accounts, right? But you don't have North Korea marching in and taking out billions of dollars out of the market, out of the normal banking market, just out of the SWIFT system, being like, oh, got it, right? That doesn't happen, and it does happen in crypto, right? I think if you look at different rogue states and whatnot, they're making a lot of money off of fraud that is predicated off of one way or another off crypto, right? And off of holding crypto. It's happening on a week-to-week basis. I think that is a fundamental problem that's going to need to be addressed. And again, I think the only, you can't stop people from like hacking systems. That's going to happen anyway. If they're going to find an exploit, they're going to find an exploit. There's always going to be one, right? But there has to be ways of tracking this and trying to interdicting it before it happens. Right now, it's happening too late. The money's gone.
I totally agree on the fact that it's too prevalent now, but projecting forward, I'm a student of history. One of my favorite things is in the 1980s, high schools in New York City started banning beepers because they were, quote, the tool of the drug dealer. And now, like, every 13-year-old goes to high school with a far, far more sophisticated mobile device. And I'll go out on a limb and I say that, like, law enforcement is happy about that, because it gives them a way to catch bad people doing bad things. So projecting forward, right, even with like whatever North Korea is up to, and you guys are the ones building the tools actually, so this is why I'm curious. What do you think happens down the road as the tools become more sophisticated, and then hopefully we do get regulatory clarity about how the industry needs to adopt them?
So,
no, please go ahead.
To hold crypto, yes, but that's actually right. Like, North Koreans are not that I talk to that many North Koreans, unfortunately, but the bad actors in this ecosystem are using these rails because they're being too relevant cash out point back to some fiat ecosystem. So on and off ramps are the only points at which you get tangible value.
And those are just for our audience, like some examples of,
exchanges. You can.
No, I mean, it could be exchanges, could be banks, could be payment providers.
Basically, anyone that's willing to actually say, I'm going to take I'm going to take crypto on chain. I'm going to exchange them out, typically to a bank account or some digital account in a fiat, like $1 or euro, what have you. But to your point on interdiction, if there were compliant frameworks. And most of the time in the West, it's not that big of an issue anyway, or at least not purported to be that big of an issue. If there were more clear guidelines, you probably would have global VASPs, right? These virtual asset service providers, at least complying with them if they wanted to do business broadly, because at least if you have guidelines, you say, okay, well, I'm far afield of them, but I'm at least in the same, we're speaking a similar language, right? As opposed to just saying, cool, well, there's no guideline, I'm gonna take money that was clearly from a North Korean hack, because why bridge send me $600 million today, and I'm going to cash it out, and you're going to get fiat currency off of that, and some of that is going to be in US dollar denomination, which is a crazy concept, but that's the issue of risk and interdiction today. And I think without any sort of clear regulatory perspective that you can kind of broadcast out through traditional financial power into this ecosystem, I don't see an alternative way around that. But I think once you introduce that, there's a very clear perspective, which is, the biggest denominated stablecoins are clearly US dollars. The US, if they were interested, or Europe is interested, right, in participating broadly in this ecosystem, can clearly impose what are good markets. So by saying, hey, here's an excellent market to be participating in, and you have, you're less volatile than a region or a country may have been a part of, you're giving a positive economic incentive to participate meaningfully in this ecosystem, and that also hampers bad activity. But right now, if you're an unregulated exchange somewhere, in Asia, let's say, right, and you're interested in just making a bunch of money because you're going to charge a nice fee and you get to go home and you get to do the same thing tomorrow, and the global market will sustain you because you're operating in a lack of regulatory clarity. So you're the farthest of the Wild West, but you're still within the scope, right? Because no one has said anything to the contrary other than like wagging a finger at you. I think as you move away from that, you're going to get a much healthier financial ecosystem.
Okay.
I'd love to add on to that, if I may, real quick, which I think there's definitely the aspect we're talking about of incentives and overall, making sure that if America is gaining more significance and more impact in this ecosystem, I think it's related parties would also want to make sure that their interests are vested, and I think that's where there's a ton of activity happening from North Korea, for example, and I think that's more along the idea of like incentives and being part of the changing economic landscape there. At the same time, I want to add a different element here on the security research side, where I think just thinking through what is usually the incentives for folks who have these skills to be able to launch exploits, to be able to get money out of these systems, having just built and used systems in the Web 2 world for the last 4 to 5 years, it can be extremely complex to be able to reverse engineer closed source systems to convert data into tangible assets and then be able to kind of get those into hard-earned cash for the traditional Web 2 hacker or exploiter. Meanwhile, if you think about the blockchain world, you have all these assets that are basically already denominated in near cash value that are sitting behind a very, very kind of recently developed ecosystem. So even folks who have the skills are very much flocking towards doing exploits and reverse engineering, like the threats in the Web3 space. So of course, there is obviously the technology element to this, which has obviously come around very quickly. But if you look at the security incidents, it's been extremely rapid and only increasing in the blockchain space. And I think it's because it's essentially just cash on chain, as opposed to what would otherwise be a very complex attacker lifecycle.
Okay, well, I believe we're out of time. The last thing I would say is those of you who are students, as you can see, there are a lot of interesting and difficult to answer questions in our domain. Many of them touch the policy side and the legal sides and basic questions about how we want to organize society. So it's just an advertisement, like we need more of you to join us. But otherwise, thank you very much. And thank you, let's applaud our panelists for taking the time to join us.
Thank you.
When I was working at Sears, they could call me and let me know dinner was ready.
Age tell right
Right.
Anyway, I want to thank all of you for joining us and all of our excellent speakers today. Thanks to Georgetown Law and Coinbase for their support. Excellent set of discussions, and we welcome you to the next events that will be hosted at the law school. So thank you all very much.
Thanks.
Thanks, Abid. Thank you so much.
I agree on everything.